But here is an example of someone that had $60,000 of income in two different scenarios. In one case, there was $11,100 that was taxable. In the other case, only $4,000. So I'm just kind of going through this. If taxes feel daunting or they feel complex, they are. Yeah. If it feels confusing, it is. So don't, and in reality, Chris had talked, and not only heard this, that we do continuing education classes for CPAs in a very small segment of income taxes as it relates to retirees. But ultimately, the CPA is responsible. Ultimately, the CPA has to know the tax code, but we just kind of point them in the right direction with this stuff. Just like we're kind of pointing you in the right direction of things to be aware of, so when you sit with Chris, you're able to bring up some things, and of course, he will take you through his process. You don't just have to, he'll be able to help you through it. Okay, so here's an example, just exactly what you had talked about. $40,000 from the IRA, $20,000 from Social Security, or $20,000 from the IRA and $40,000 from Social Security is the difference between having almost $25,000 taxed and zero taxed. So the question is more how than how much. And Medicare premium, a lot of you have probably experienced this, where you trigger excess premiums for Medicare. 3.8% investment tax that you can hit a bonus on if your income is higher, where you have to pay an additional on everything, 3.8% tax. Bonuses and not a good bonus. Here's an income tax cost curve. This is interesting. Depending on what this couple was earning, that's the percentage of income tax that they were paying. Isn't that something? It's so weird, right? All right, here's a way that you can get money to a charity without paying any income taxes on it. It's called a qualified charitable donation. And we did an article on exactly how to do that, how to do it, if you qualify for it, how much, how to report it to the IRS, how to know that the IRS was reported to them properly. Tax brackets. We asked you before what tax bracket you're in. The reason this is important is there's a dramatic difference in tax brackets. If you're in the 12% tax bracket, if you want to get $100,000 out after tax, you would have to take out $113,000, pay 12% or $13,000 in income taxes to net $100,000. If you're in the very next tax bracket, which is a 22%, to get that same $100,000 out, you would have to take out $128,000, pay 22% to get $100,000 after tax, and the difference is over double. That's why it's so important. That's why.